Hey traders, welcome back to the channel. So in this video we're going to talk about mastering chart patterns. So what is chart patterns? Chart patterns are those kinds of shapes that you see in the chart. So traders use this information to anticipate potential future prices. So what I mean by chart patterns is, like, sometimes you will see market going up and then hitting one level and then dropping, all of a sudden just dropping, and then retesting back again and then dropping back. So this is one of the patterns. Another pattern is market go up, try to break but fail, and then they went up, like it forms like an M, and then it drops, retraces, and then continues down. So what does this mean? So each of these has its own name. So we will look at three different kinds of chart patterns. So what you need to know is there is something called continuation patterns, and then you have reversal patterns, and you have bilateral. That means the market can either go up or go down. So we'll just stick with continuation and reversal for now. So continuation is something like when the market is going up, this is impulsive, and then it corrects, and when we look at this corrective move, does it go up or does it go down? So this is what we want to know. Okay, so continuation is when the market is going up, up, and then it comes to a corrective state, and then it continues higher. So this continuation. Reversal, on the other hand, is like market is going up higher, and then starts to correct at the top, and then starts to change the trend. So that's a reversal pattern. So anytime when you are looking at the chart, you are looking at certain patterns, you can always identify either one of these two, whether the price is gonna remain or the price is gonna reverse. Something like this. At this point, this was one impulsive move, and this is a corrective move, and this was the continuation. Same thing like this. This was the impulsive move, this is the bigger corrective, and this is the impulsive. So market is always in that point. So this was an, try to guess and see, this is a, you see, and market anticipated to go higher, but then it reversed. So this is bilateral move, where market can either go anywhere based on the volatility. Okay, so let's look at few patterns. So we'll have the first one, which is for the continuation pattern. So we have ascending and descending triangles. So this pattern is like something like this, where market goes up, and then the corrective is around like this. It's like ascending up. This corrective structure is going up, so that's why they call it ascending triangle. And this is for bullish, this is bull, and for bearish is something like impulsive, and then the corrective is something like this, descending. So this is bear. sorry for the handwriting. Okay, so market is going up, and then it ascends slowly higher, and then this is a bullish, this is a bearish. And then the next one we have bearish and bullish flags. So this one is very easy to spot. Okay, let me use this then. Impulsive, and then the corrective structure is like a flag. It's very like this. So here you will see something like this. Corrective structure is more to like a flag, and then how we look at it is, let's say if it breaks above this point, any retracement we can take a trade and look for higher points. So this is one. This is bullish flag, and then we look at bearish flag. So bearish flag is the opposite of it. So you have like this, and then like this, this, and then drop. So this one is it looks very neat. So one thing to note that when you have this kind of things, it's not always precisely on the dot, it's around that zone. So it's around that zone of these levels where you will see, this might be a bearish or bullish flag. So all these patterns are probability based. It's not certainty. That means it's not exactly this is how it's gonna happen. Okay, so this is the next continuation pattern, and we have bullish and bearish wedges. So bullish and bearish wedges. So bullish and bearish wedges looks like impulsive, and then the corrective is more spread out. So it's like a wedge, and then anything can go higher. So this one is it's actually coming smaller. So it's like all these levels are actually coming smaller. So it's like something like a wedge, like this. And then for bearish ones, bearish wedges, same thing, like this. So inside here is the corrective structure. And then we wait for it to break, retest, we can take a sell entry. Okay, so these are the basic continuation patterns. So now let's look at reversal patterns. So I'll just remove all this. So first, reversal patterns, the most one that everyone talks about is double top and double bottom reversal patterns. So we have double top and bottom. So for double top is simple, it's like an M. Market is impulsive, tries to break one point, fails, and this fail has to be quite significant too, and then try again. It doesn't has to be exactly to the point, around the zone should be fine, and then drop. And then one thing to note is the point where which this was the last push, this is like a what they call it as neckline. So what traders do is they usually wait for market to come around this level to go short. So this is double top. We have the first top, second top, and then we look at double bottom, same thing. Market drop, fail to go higher, try again, and then fail, and then retraces back to this, call it the neckline, and then hit up. So I'll just draw this and put here neckline. So here is your entry and this is your entry. Okay, so this is for double bottom and double top, and then the next one is triple bottom and triple top. So triple top and bottom. So rather than having 2 points, now it has 3 points. Triple top. Market tried, failed, tried again, failed, tried again, and then failed. So same thing, this becomes the neckline. And then for double bottom, triple bottom, tried, failed, tried again, failed, tried again, fail, retest, and advance. So this is the neckline, and you take your entry here. So here you have triple top and triple bottom. Okay, so and then the last one is head and shoulders. So this is also everywhere people see, and even in trading view you have this head and shoulders pattern. So how it works is there will be always that one point for the left shoulder, and then a slight retracement, and then it advances very high up and then drop to around the same area. It can always change the area, but let's keep it simple. We keep it here, and then this will be the right shoulder, and then drops. So this is for bearish side. That means you're taking a sell. So what happens is this is your neckline, and then when the market comes back to this point, you'll go short. So you can always take a sell position, put your stop loss right below here, or if you want better risk, lower risk, you can put it at the top. Let's just keep it here, and then you can aim it to where the move started. And then you have inverse head and shoulders. So inverse head and shoulders is the opposite. So market trending down, retracement, advance further down. No, sorry, this one is wrong. Something like this. Right shoulder, and then this is your neckline. Wait for the market to retest to go long, and your stop loss is here. Take profit is where it started. So when you see this kind of patterns on the chart, then you can make the decision to, you will know that a lot of traders are seeing the same thing and you can have a higher probability. That's all it matters. So let's see for one. So this is like a small one where you can see left shoulder, head, right shoulder, okay, so it doesn't make much sense, but let's look at another one. Okay, this one looks pretty. Okay, let's use from here. Left shoulder, head, right shoulder, and then advance further. So here now we have the neckline here. It's like, if we look at it from a trend line perspective, it's like this is a bit slanted, so market didn't come right to this area, to the retest area, but you see it still advances. So same thing, you can look for another one. So what you need to do is to practice identifying these kind of patterns. So like you see this one, this is like a double top, like a mini double top, where you have one top, you have second top, market break, this is like the neckline, market retraces and then drops. This is also like a mini double bottom, this is triple top, and then this is like the neckline, market drop, retested, and then drop further. So when you're always looking at one specific thing or one specific pattern, it will be easy for you to identify in the chart. So like this, 1, 2, okay, this one doesn't apply, this is too long. Okay, this one, this is left shoulder, right shoulder, left shoulder, head, and right shoulder. This is not a very strong move, but you get the point. Where let's put it here, so it doesn't make much, it has to always be something like, okay, drop, it doesn't have to be exactly to the point, but so this way you can either do this or you can add horizontal levels to see that zone to take an entry, like this one, this area you can look at it from, okay, this point, and this was the last push it made. So when the market breaks above this, any retracement to this area, you can take the position. So like this. So for reversal patterns is always like this, and for continuation patterns we will try to find those levels when in the trending market, either it's trending up or trending down. So whenever we have like an impulsive move, we look at the corrective structure, so we mark those corrective structure. Is this a continuation pattern or is this a reversal pattern? So let's say this is like a continuation pattern, then we look for the next continuation pattern. So until it fails and it creates some kind of reversal at the top, then we know this is about to change. So that is how you identify and look at it from a charting perspective. Like, this is all psychology behind, where traders are basically thinking at this point everyone is looking at the same chart. It's not like me and you looking at different chart. So when this tends to happen, what is the majority of people are doing? Like, when this candle happens, majority of it's struggling between buyers and sellers. Buyers pushing up, sellers bringing down. Buyers pushing up, sellers bringing down. But eventually, who won? Sellers won. So there's the battle between buyers and sellers are happening at this point. So you need to always take a look at that. So market can always, it doesn't always has to be okay. If this happens, the flag happens, market has to go up. No. When the flag happen, bullish or bearish flag, the market can always drop back down. So this is where your probability is playing a part, where some kinds of moves in certain charts might be very common. Some patterns it's very unlikely, something like this. So like USD JPY, what patterns are mostly common in USD CAD? Is continuation patterns a lot, or is it reversal patterns, things like that. Okay, so I hope you guys learn something from this video. Try to practice it yourself, use demo account, practice it, see how patterns you can recognize specific kinds of patterns, different kinds of reversal patterns, or you find some kind of new patterns, things like that. So in online you can also find a lot of patterns, but stick with the common ones and try to work with a small number of it first. Don't look at it from like 50 different patterns and then trying to figure out if this one didn't work out or this one didn't show up. Don't look for one pattern and then just go through that pattern every single time. Then it's easier. Like this is one of its pattern, and then this is like another one. So when you focus on just one thing, it's easier for you to stick and find for it. Like when I ask you to just look for a blue car, your mind will be specifically looking for the blue car, nothing else. Your mind will not say I'm looking for a silver car or a blue gray car. No, you're just looking for a blue car, that's all. So when you're looking at one pattern, just look at that only pattern and then find it. Your brain will try to figure out where the pattern is. Okay, so let me know how it's going on for you, and let me see how I can help you, and see you in the next video.